What up, YouTube? It's your boy Charles Enoch. You already know we back with another Invest in Myself episode. So run the intro. So on today's episode, I wanted to go over the different types of line of credits that you can obtain. But before I do that, you already know I got to do the YouTube thing. So your boy's getting close to being monetized. So I'm going to ask you guys, help a brother out. So go ahead, smash that like button, make that thing turn blue. And if you're new to the channel, or if you watch some of my videos and just haven't done so yet, go ahead, take that little bit of time, hit that subscribe button for me. And also share my video to anybody you feel that may benefit them. I appreciate anybody that does this because it does help me reach a higher audience base. All right, so this list might not have all the different types of lines of credit. So please let me know in the comments if there's some types of lines of credit that I'm missing. Now, some of these are going to be very obvious and very common, and others you may have not heard about. So let's get started. So number one, credit cards. Credit cards are probably one of the easiest lines of credit that you can get. I mean, you don't even have to go looking for them. They literally just come in the mail by masses saying, hey, apply for our credit card. So one of the benefits of a credit card is that a lot of credit cards come with some type of reward system where when you spend money, you're able to get like cash back or some type of rewards points to redeem it for like a gift card or even flight miles. So ideally, this is going to increase your cash flow while you're using your credit card to pay your monthly expenses. The other benefit of a credit card, it offers that 30-day payback system, where if you pay the statement balance off by the due date, you won't accrue any interest. The con with the credit card, it can be hard to pull out cash from the credit card without receiving some type of fee. All right, so number two we have on the list is a personal line of credit or a PLOC. So a personal line of credit is similar to a loan, but instead of the bank giving you a lump sum payment and you make an agreement to pay it off in a set amount of years monthly, the bank instead will set you up an account with a set amount of money where you can draw at any time. And whatever you draw, then you'll be charged simple interest on it. So for example, let's say that you have a Bank of America checking account and you apply for a personal line of credit and you were granted a personal line of credit. You will see that it will have a personal line of credit account where you can make a transfer, draw out of it and put it into your checking account. So the money that you transfer out of the checking account will be the money that they start charging you simple interest on. So it is important to remember with the line of credit, you are charged daily interest on it. And even if you pay it all off before the due date, you are still going to be charged that interest. Unlike a credit card, if you make that statement balance and you pay it in full, you will not be charged interest. So number three is a student line of credit. So many may not know, but you can apply for a student line of credit. And again, unlike a loan where they give you a lump sum payment, with the student line of credit, you are able to take whatever you need out and they're going to charge you interest on what you have taken out of the line of credit. So if you are a student, I highly suggest you looking into taking out a student line of credit. This can help you incorporate velocity banking when paying off that student loan if you can't get a personal line of credit. So number four, we have a home equity line of credit or a HELOC. So this is my personal favorite line of credit because I'm a real estate investor and it helps me acquire more properties quicker. Now, to obtain a HELOC, you do have to have equity in your property. So equity is going to be the difference between what you owe on your property and what your property is valued at. So for example, if my house is valued at $300,000, but I owe $200,000 on the property, then my equity is going to be $100,000. Now the bank is going to give you a certain percentage of that equity. And usually it's going to be between 65 to 95% of the equity in your house. Also, since it's a secured loan, meaning that you're using your house for collateral, then the interest rate will be lower than an unsecured line of credit. All right, so number 5, we have a farmer's line of credit. Yes, there's a thing called a farmer's line of credit where you can use your farm as collateral to have access to capital, to reinvest in your farm or do whatever with it. So this is going to work similar to a HELOC, where you're going to have equity in your farmland. And we know interest rates are going to be low since it's a secured line of credit. So number 6, we have an investment or a security line of credit. So this also has various other names, but the concept is pretty much the same. So this type of line of credit is when an individual uses their stock investment portfolio as collateral for a line of credit. Again, this is going to be a secured line of credit, so you're going to get an incredibly low interest rate. So like a HELOC, depending on your investment portfolio, these lines of credits can be very high, allowing you access to a lot of capital and a lot of power to really invest these funds. On the real, I probably need to think about getting me a stock portfolio if I can get a line of credit off of it. So number 7 is a certificate deposit line of credit, or a CD line of credit. So those that don't know what a CD is, it's a special type of savings account where you have to store your money into that account for a set amount of months or years. And usually the longer that you leave it in there, the higher the interest rate will be, which means the higher the return on your money will be. Now, this investment isn't really that risky. Therefore, the return on your money isn't going to be that high, but it'll be higher than your average savings account. But the idea here is you're able to get access to a line of credit while your money is still in the CD growing. So you're going to have access to your funds, but at a lower interest rate because it is a secured line of credit. Now, you just need to make sure to invest that line of credit where you're getting more than the interest that it's charging you. And again, your money is still growing in the CD. So these are the lines of credits I know about. And if I'm missing some or unaware of any, please leave them down in the comments section. Also, don't forget to like the video. And if you haven't done so yet, go ahead, click that subscribe button. I appreciate everybody that does that. It does help me reach a higher audience base. And last thing, you guys have a good holiday weekend. Happy 4th. Peace out.